And now it's time for Development Debates. We dig deeper into some of the questions shaping the future and present of China. Today, we'll see two Chinese experts debating if the Chinese central bank should depreciate the RMB. The value of the Chinese currency has been changing. RMB has been depreciating since February this year, which means that it's harder now to buy Chinese products with US dollars. And this is bad for exports. Chinese goods are now more expensive, so they're less attractive to people abroad. This also makes it harder for people living in China. This could be a major event for the global economy. As 21st Century Business Herald reports, the RMB to US dollar exchange rate has dropped by 3.3% since the beginning of this year to today. The plunge has led many to believe the Chinese central bank is trying to help out foreign trade companies. There has already been a lot of controversy about China manipulating currency rates, but this move by the central bank might be more about addressing risk from deflation. China's new leadership plans to create more job opportunities and control unemployment rates to keep up its economy. They believe that a depreciating RMB would help achieve that goal. The government wants to depreciate the RMB value in order to benefit the country's economic development. However, Chinese experts are still debating if it's a wise move. The chief economist of Industrial Bank, Liu Zhengwei, suggests continuing depreciation. When interviewed by Caijing.com, Liu said the RMB appreciation actually weakens Chinese companies' profitability, and this causes their asset-to-liability ratios to keep increasing. Therefore, Liu pointed out that China's economy will be heavily affected if the RMB keeps appreciating. Liu illustrated the issue from both a micro and macro perspective. In the micro view, Liu said the RMB to US dollar exchange rate actually has an inverse relationship with the Chinese company's profits. The higher the rate is, the lower the profits will be, or vice versa. Liu pointed out the profit margin is more important than any other thing. No matter how high a company's asset-to-liability ratio is, it still can lower the ratio as long as it can make a profit. However, for some companies, even if its asset-to-liability ratio remains low, the ratio will keep increasing, even if they don't profit much. From a macro perspective, Liu pointed out that the percentage of China's current account surplus to its GDP has dropped below 4% since 2009. Generally, a country's international payment becomes balanced if the rate is about 3%. So Liu said that it indicates the RMB exchange rate has been overvalued. Therefore, Liu suggested the central bank should depreciate the value. However, a visiting professor at Peking University, Michael Pettis, doesn't support Liu's idea. Michael Pettis wrote an article posted on his blog about the depreciating RMB value. He said it won't have a positive impact on China's economy. Michael Pettis said that China needs to change its economy from investment to consumption-oriented structures. This requires a percentage of family incomes in GDP to keep increasing. However, RMB depreciation will let the percentage decrease. Michael Pettis pointed out that there are ways for the Chinese government to depreciate the RMB's value if it still wants to rebalance its economy. They need to improve its interest rate and increase salaries, but this will cost more. Apart from that, Michael Pettis admitted that depreciating the RMB would support the employment market and boost the economy. However, he said this only happens when unemployment rates stay at a high level. Now the unemployment rate in China is still low. Michael Pettis said it's not that urgent to depreciate the RMB under the current circumstances. Finally, Michael Pettis said the central bank plans to prevent hot money inflow by depreciating the RMB's value. This measure would let more hot money flow out. Michael Pettis pointed out that capital flight to China is quite serious now. Depreciating the RMB would make the situation even worse. It might be true that the central bank depreciating the RMB will help control China's unemployment rate. It can stay at a low level and meanwhile boost its economy. But the central government intervening in the foreign exchange market to increase trade surplus might also cause protests from its trade partners.